Hi, everyone. Thanks for joining. I think this is Carlo. I'm co-founder and COO of Hummingbot. Thanks for joining today. I think we'll still give it a few minutes. Thanks for being on time for everyone who's here so far. In the meantime, while we wait for some others to join, I guess I posted a poll. So just to get a better sense of the folks who are on the call and how we can tailor this webinar. So in the meantime, feel free as well to ask any questions you may have on our chat as we go through the presentation. So on the call with me today as well is from the Hummingbot team. We also have Dennis, who heads our QA and support team. So as we go along, he can help answer any questions you guys may have on the chat. Also, we should have time. We have an hour for this webinar. So towards the end, we will have time for some Q&A. Like I said, we can get started. Also, this webinar will be recorded. So if anyone wants to refer to it later, we will be posting it on our YouTube and on our chat as well. So it looks like everyone here is new to Hummingbot, so that's good. We'll definitely give you an overview of Hummingbot liquidity mining and what this liquidity mining campaign for Algorand is all about. So with that, we'll just jump right in. And as I mentioned earlier, I guess feel free throughout this webinar to post any questions you may have on chat. And also for anyone, if you wouldn't mind going on mute so that we make sure we avoid any background noise from other folks while we're going through this. But definitely during Q&A, feel free to unmute and then ask questions then towards the end. Okay. So let me just get my screen set up here. All right. So just a bit of housekeeping before we get started. So this is not intended to be financial or investment advice. Before participating in any kind of trading or liquidity mining, obviously you should do your own research. I will be showing some trading settings and configurations. So just note that these are solely for demonstration purposes only. If you do want to talk with other traders, talk shop, discuss different trading strategies, and also like the features, parameters of Hummingbot, you're welcome to join our Discord community. So there we do have forums where folks, we have trader channels where folks can discuss different questions they have or opinions on different parts of running Hummingbot and trading. So with that said, let's jump right in. So first, just an overview. So last week we announced that we would be launching a liquidity mining campaign for algo tokens. So the campaign kicks off on Tuesday, so this coming Tuesday. And what the campaign does is it offers rewards for anyone creating orders and providing liquidity for algo tokens, basically market making for algo tokens. I'll explain in more detail as we go what this actually means through this webinar. But just to summarize the terms of the campaign. So the campaign will run for 6 months. It will offer a total reward pool of $5,000 per month equivalent, which will be split between both the Algo BTC and Algo USDT trading pairs on Binance.com. So it's 2,500 each, and that's the total aggregate pool that will be shared amongst the participants, the miners who are participating. The rewards will be paid out in a combination of Algo and USDT ASA tokens. So ASA, which is the USDT. So USDT ASA is the Tether implementation on the Algorand blockchain. So we are paying the rewards on the Algorand blockchain to Algo wallets. And the orders that will be eligible for rewards are maker orders, so buy and sell orders, and which have a max spread of 2% or tighter. Again, through this webinar, I'll explain in more detail what that means. And then so with with that being said, yeah, I'll first give an overview of what liquidity mining is all about. So in concept, Hummingbot Miner, which is our liquidity mining platform, it's pretty much the same as liquidity mining as has been popularized by DeFi protocols such as Balancer, Curify, Uniswap. And Hummingbot Miner and DeFi liquidity mining are both essentially trying to do the same thing. So liquidity mining is a framework for incentivizing a decentralized group of actors for providing liquidity. So Hummingbot Miner and AMMs, they just take a different approach on how to get there. And to explain this concept, I'll just give a quick overview of how it works in DeFi space. And I'm sure some of you are probably already familiar with this, but this would just help to explain how Hummingbot Miner works as well. So here's an example of a liquidity pool on Uniswap. So in order for someone to participate, they deposit assets into the liquidity pool. So this makes him a liquidity provider or LP. So the assets in the pool are used to enable trading between, in this case, FDAI or whatever asset is in that liquidity pool. And that facilitates trading, so allows others in the market to trade the FDAI pair against that contract. And for each trade, the liquidity pool receives a fee of 0.3%. So this fee is accumulated over time, and it's equally split and shared between all the LPs. And then at some point in the future, the LP can take his assets out of the liquidity pool. And the amount of assets that he takes out will likely be different from what he deposited in the first place. So there will probably be a different mix of Ethereum and DAI. And this depends on the trading that's happened in the liquidity pool while he's been an LP. And he could have incurred some gains or losses. And he also gets a share of the trading fees that have accumulated. So this here is just the basic concept of an automated market maker. So the original, for example, Uniswap. So the next part is where liquidity mining comes in. So previously, the 0.3% trading fee wasn't a whole lot being paid to LPs, and there have been a number of studies showing that the LP probably could lose money versus just holding his assets and not doing anything. So what liquidity mining did was introduce additional token rewards that sweetened the deal for LPs. And then so for every Ethereum block that the LP's assets are in the pool, the LP is earning additional uni tokens or token rewards, whatever protocol it is. So in this case, you'll see in the liquidity pool box, there's a pool rate. So this one's distributing 583,000 of uni tokens each week. So this is kind of what made liquidity mining really popular. So these protocols were offering generous pool rewards. And so we saw a growth in this in the past few months. So now shifting over to Hummingbot Miner. So how Hummingbot Miner works, which is our kind of platform and our approach for liquidity mining. So the biggest difference between DeFi AMMs and Hummingbot Miner is that Hummingbot Miner is not a smart contract protocol. Instead, it's software and infrastructure that allows for the same concept of liquidity mining, but on centralized exchanges. So the trading happens on a centralized exchange. So if you're going to participate in Hummingbot Miner, you would trade assets from your own exchange account. And in order to earn liquidity mining rewards, you would need to create orders on the exchange as you would with normal trading. But more specifically, you would be creating buy and sell orders that add to order book depth. You would also need to continually refresh and update your orders to make sure you adjust them for market movements and prices. And so this is basically the traditional concept of market making. But because market making requires you to constantly place, refresh, and update orders as prices change in the market, you probably wouldn't want to do this manually. So what we've done is we've created a trading bot, so Hummingbot, which is an open source trading bot, which can help automate and do all of this for you. So it could help you to market make. So you install it on your computer, and this is what I'll demo later. And you specify your trading parameters. And in this, and in Hummingbot, you enter your trade-enabled API keys. So this is what gives it authorization to place trades and manage orders on your behalf on your exchange account. So the next part is where our Hummingbot Miners platform comes in. So what we have here is Hummingbot Miner it actually collects order book data. So it collects real-time order book data from the exchange, and it uses that data to determine how rewards are to be allocated and distributed to the different participants. So participating users need to enter read-only API keys to allow the system to retrieve their order data. And then lastly, so similar to the concept of rewards being paid for each block in DeFi, in our version of liquidity mining, rewards are paid or earned every minute. And they're based on the orders you've created and placed within that minute. And the rewards can be paid out in any token. So we can use stablecoins, or we can use an issuer's own token on their own blockchain, which is exactly what we're doing for the Algo campaign. So one thing to note and to point out here is that you can see that Hummingbot, the trading bot, is actually separate from the Hummingbot miner system. And so since Hummingbot is open source software, users run it on their own computers. So we don't see any of the data that you're generating or creating as a result of your use of Hummingbot. So just like any other open source software, you can do whatever you want with it and as you wish. But separately, what Hummingbot Miner does is it collects order book data for participating users. So if you wanted to participate in Hummingbot Miners, and if you wanted to use Hummingbot to help facilitate your trading, you would have to set up both independently. And so that's what I'll provide you a demo of now. Okay, so here is test example Binance account. So to first get started, you will need to have a Binance.com account, and because that's where we're running this liquidity mining campaign on. And you also need to have some amount of assets in that account. In this case, I'm going to be demoing trading between Algo USDT. So that's what we'll configure in this demo. We'll then need to set up 2 sets of API keys. Let me just get the chat here. Okay, so you go under the user icon, there's an API section. So that's where you go to create your API keys. And you simply just enter a name for your key and hit create. It will ask you to verify. I'm not going to do that now, but basically to do this, you would need to have 2FA already enabled. So, and you just need to verify in your email. But you can see here, I've already set up 2 sets of API keys. So this first one, HBot trading, this one is enabled for trading. So you can see below on the API restrictions, this has the authority to read your data as well as is enabled for spot and margin trading. So this is what we'll use for Hummingbot, the trading bot. And then my second API key that I've created here is a read-only. So it's Hummingbot Miners API key is what I named it. And this one can read, and you'll note here that I've enabled it for spot and margin trading. Just one thing to note here, when you create an API key, by default, it will be enabled for spot and margin trading. So this is the default kind of configuration for an API key. If you wanted to make it read-only, you just simply go to edit restrictions, uncheck the enable spot and margin trading, and then hit save. And that's how you would make your read-only API key. So when you create them for the first time, just note those API keys. So you note the API key as well as the secret key. And we'll just use that later. So we'll save that and use that later when we're configuring Hummingbot and Hummingbot Miner. So next, I'll go ahead and install Hummingbot. So if you go, there's a number of ways you can do that. One is the simplest way is you can go to our homepage. You can go to get started, hit download Hummingbot, and then you choose the appropriate version for your operating system. So here we'll download the Mac version. So while this is downloading, well, that's pretty quick. It's actually completed. I'll just mention how else other ways you can install Hummingbot. So you can also clone it, pull it from our GitHub repo. You can also use Docker. So a lot of folks we use Docker to basically run multiple instances and run it on cloud servers. So now we'll open it up. And so this program, we actually haven't registered it as an official like Windows application or Mac on the Mac App Store. So you might see some security warnings, which means you may need to just override the security settings. So here we'll just do that under the Mac preferences. I'll go to security and privacy and just hit open anyway. So now it's going to start to load up. It's actually popped up on my other monitor, so I'll just slide it over here. I'll zoom in. So you can see here that Hummingbot is a terminal command line application. This is because when you run trading bots, typically you'd want them running 24/7. So you would want at least the capability of running it on a cloud server. We do have plans to roll out a GUI, but that's in the future. So I'll just hit OK here. So make sure to read all the disclaimers, as I mentioned at the beginning of this call, as in what highlights here as well. So crypto trading, any kind of trading is risky. So you should just be cautious when you first start. So I'll just set a password. So that's it. So basically, you'll notice here that there's kind of 3 panels to Hummingbot. This is the top left is kind of the outputs of the commands that you're entering. On the bottom left, that's your input terminal. And on the right will be the bot's logging. So to get started, I'd have to connect it to an exchange. So here you can see when I type in the command connect, and I'll zoom in a bit more. So hopefully it's easy for you guys to see. So you see here, it lists a number of exchanges that Hummingbot is integrated with. And so in order to connect one of the exchanges, I'll type in connect and Binance. And you can also see how Hummingbot's UI generally works. So whenever you're enabling or configuring a parameter or a strategy, it will prompt you with a series of questions, and then you'll respond to each one. So here I'll enter my API key. And I'll enter my API secret. So you can see here, it says now I'm connected to Binance. So if I hit connect again, so now that I've input my keys, it says they're there. But also, as I did that, Hummingbot actually already confirmed and checked the connection with Binance. So now it's actually connected. It's confirmed that it's a valid API key. So the next is I'll create a strategy. Great. So you can see here, again, it will prompt you with some questions. So if I hit tab, it will show me a list of valid responses to each question, or the ones that are kind of multiple choice. So here, these are the 4 strategies we currently have built in to Hummingbot. So we can have arbitrage, a Celo Arb, which is Celo is a AMM, so it's its own blockchain. So that allows us to arb on that blockchain. Cross-exchange market making, but the one I'll demo today is pure market making. So this is just normal market making. And then I'll enter Binance. So that's what we're going to be demonstrating this on. And then next, I'll choose the trading pair I want to trade. So I'll do Algo USDT. So the next parameters, so it's going to ask me for my bid and ask spreads. So what this is so when you're market making, because you're providing liquidity to the market, typically market makers, you would be placing both buy and sell orders. So this first question is saying, how much from the mid price do I want, what spread from the mid price do I want to make my first bid order? And so what mid price is, just to also explain what that is, that's just the reference we're using for pricing. So how you typically find that is on exchange. We could actually pull up the exchange. So for this trading pair, we'll just pull up Algo BTC, Algo USDT. So here's kind of, we see, your typical order book and how it looks. So here you have on the green sides are all the bids. So these are all the offers to buy Algo in this case. And then in the red kind of chart bar graph is all the offers to sell Algo. So mid price is this number noted here, this 3108. What it is it's the average of the best bid, so the highest price bid. So currently the highest price, the best price at which someone, if they wanted to sell, they can sell. And then the best ask is the lowest sell price. So those are kind of the best prices currently available in the market where someone who wanted to trade can execute their trades. So mid price is simply just the average between the two, the best bid and then the best ask. And here's the concept here is like when you're creating orders, as we'll see momentarily, market making means you're contributing to order book depth. So depth is like these charts. And so when we create orders, we're adding order book depth. What that does, it facilitates trading and it enables others to trade this asset. So here, bids for bid spread, typically it kind of depends on the market, how liquid it is. So for markets such as Bitcoin, USDT, for example, which are highly liquid, your bid spreads, your spread or market spreads are really tight. So they're like fractions of percentage points. And the less liquid an asset is, typically these would be wider because if it's less liquid, it's a bit riskier. So you would want to set these wider. Just for the purposes of this demo, I'm just going to use a 0.5 bid spread. So here, when I enter 0.5, that's a 0.5% spread. And next, it will ask me the same for ask spread. So I'll just use the same as well, 0.5. Next, it will ask me how often do I want to refresh my pricing. So typically, I think our users use anywhere from 30 to 60 seconds for this. And this is just literally just how long it waits before refreshing prices in case the market has moved. So here we'll use, let's say, 30 seconds. And then the next parameter we config is our trade sizes or our order sizes. Here, what the minimum is that's denoted here. Exchanges typically have a minimum order size that they'll accept for orders. So if it's too small, or if you place an order that's too small, the exchange will not accept it. It's usually typically around the equivalent of $10 US. So here, that's what this 35.38 algo corresponds to. It's roughly $10 US. So in this case, you would want to place the size that's more than that, and also it depends on how much inventory you have and how much you want to trade. Just for now, let's just use, let's say 100. So here it asks about a ping pong feature. So we Hummingbot has a number of advanced features which helps users just to customize their bots a bit more. So I'd recommend you go into that. We won't go into those into too much detail here. I would just mention just a few, but we won't go into that into too much detail. Just note that there are additional features that can help you customize the trading bot a bit more, and that you can go to our docs, read up more about, or discuss on our Discord to see if you have any questions. So for right now, I'll just go with a default of no for this feature. And then I just save the file name. So that's pretty much it. So with just a few settings, you can see that I've created the basic market making strategy. I can hit start and it would start trading already. But before we do that, I would just mention a few other things. So one other command here that's useful is config. So when I hit config, that just shows a summary of the configurations that I've set up. So you can see here what we just configured is the strategies, so the pure market making, Binance, the trading pair, Algo USDT, the spreads I indicated, and order refresh time, which is the 30 seconds, and order amount. You can also see there's a number of other other parameters here mentioned. So a lot of these are related to the advanced features. So definitely encourage you to look more into that. But typically when I typically use config just to confirm that the parameters I entered I didn't make any errors, and just to double check. And also if I load up a strategy that I'd had saved, and so if I'm returning to a session, I'll run config just to double check that I remember what I had set before. One thing I will show here, so there's two kind of safety features that I want to just will mention, and which I think would recommend generally for most people to use. So the first one is we have something called kill switch feature. So what this is if ever, it's kind of a fail safe. So if ever one Hummingbot starts trading, if ever it accumulates a certain loss, then it would stop the trading bot. So that we typically recommend that just to make sure, as the bot's trading, if the market's moving really quickly or if it's incurring losses, you can trigger the bot to stop if it hits a certain threshold. So that's one feature that I'll just show you how to config. So how we would change that is if I hit config, and then I would specify the parameter, and you can see here again it has autofill, so it will show the available parameters. So I will first enable kill switch. Next, then I will config the threshold, so the kill switch rate. Actually, one other way to use kill switch, it could also go the other way around. So what I mean by that is if you set it as a positive number, that's kind of like a feature. If you accumulated a certain amount of profit, then the bot would stop as well. So that's kind of a way to lock in your gains if the bot's performing well. But in this case, I'll just say -5. So if the bot trades and for some reason incurs 5% of losses, it will just stop the bot. And then one other configuration I would typically set is inventory skew. So what inventory skew does is it sets a target amount of base token, which is algo, and quote token, which in this case is USDT. So typically, the base asset here and quote tokens are basically the two tokens you're trading in the trading pair. You try to keep an equal amount. That kind of helps to keep the bot balanced and prevent it from. What you don't want to do is kind of have inventory swinging around too much. So you want to avoid, for example, accumulating too much algo when let's say the market's going down, or selling it too quickly when the market's going up. So what inventory skew does is it's a kind of a way it adjusts the orders of my sizes. It adjusts the sizes of my orders based on my current levels of inventory. So for example, if I have too much algo, it will decrease the size of my bids. If I have too little algo, it will decrease the size of my sells. So it's kind of like a balancing act. It just tries to continually adjust the order sizes to maintain some kind of equilibrium and try to get to that target rate. So by default, you can see here, inventory target base percentage is 50. So it's already set at 50%. So what that means, it's trying to maintain a equal mix of algo and USDT. So that one I won't set, but I will just turn this to enabled. So I'll hit config inventory skew enabled, and I will say yes. So that's pretty much it. And then for now, if I go back to the Binance page, you can see here I don't have any open orders. And now I can just hit start. So now it's connecting to Binance. So you see it started logging on the right, and you can see it's created orders already. So if I go back to the exchange, you can see it's created by order. So it actually tried to create both buy and sell, but I guess right now, because my inventory balance, because I enabled inventory skew, because right now I believe if I hit status, so actually here's one useful command, status. So status tells you the current state of the bot. So that's something you typically use. So just going through that, it shows the mid price that's set. So this is it will retrieve the best bid ask, the mid price. So that's kind of the reference it's using for pricing. And here you can see my assets. I have Algo and USDT, and then the current values here as well. So you can see here, it actually hasn't created a sell order. This is because my current amount of Algo is only 26% and it's trying to get to 50%. So that's why you can see that it only created the buy, because it's trying, the inventory skew function is trying to work. So basically it's because I'm outside of the acceptable range here. So this is another feature I'll set right now. So we have something called inventory range multiplier. So what this is it specifies a range. And if in this example, because I'm outside of this range, because my current is 26 of current amount of Algo inventory is 26%, but my acceptable range is 36 to 63%. What that means is if I fall out of the range, as in this case, it will stop creating sell orders. So what that does is it tries to help me get back to 50% more quickly. So rather than continuing to place both buy and sells, it will pause placing sell orders just because I'm outside the range in an effort to try to get me closer to 50% more quickly. So here, what inventory range multiplier does is it kind of adjusts this range. So if I set it to say 2, for example, and then I'll just stop the bot and then restart it. Okay. So hit status. It's still created only a buy order. I think, let me try make it even wider. So I'll stop it and start it again. Okay. There we go. So finally, so it's created both buy and sell orders. So if we go back to our Binance account, you can see that it has both of them there. You can also look in the order book. So I have created orders. You can see them in the order book. So I'm contributing to order book depth. So that's basically, I'm basically market making already because I've helped contribute added liquidity for the trading pair. And you can see here, because I have inventory skew enabled, just going through this table, as you saw earlier, I input amounts, target order sizes of 100, but here because I'm overweight Algo, it adjusted my sizes. So here you can see on the sell side, it reduced my sell order to 41 Algo, and on the buy side, it increased it to 158. So that's basically the inventory skew at work, trying to adjust the orders to try to help get me back closer to 50%. So that's basically how Hummingbot works. So you can see it's with just a few configs, you can get a market making bot up and running. So you can see it's doing its thing. If I leave it on the screen for a bit, you'll also see that it will refresh after a certain point of time if prices have moved. And that's pretty much it. So, but when you just get started, because again, actually there it goes. It just refreshed orders. I will just note here for users who are new to market making and Hummingbot, we just recommend a few other features. So we do have a feature called paper trading mode. So what that does is it allows you to trade or to simulate trading without actually deploying any assets yet. So you can configure the bot just as I did. Actually, this is another instance. So we could configure paper trading mode. And what that does is it basically allows me to simulate trading. So you can see here on the top left, it's paper trading mode is off. It's off because we're actually using real trading. But if you enable that, then it would just simulate trading and wouldn't actually trade any crypto yet. So that's one good way to get started, to try it out. The other thing is you could also start out with smaller amounts of assets. Just be cautious at first, and then so once you get comfortable with the bot, you could also always increase the amount you want to trade. So that's pretty much it. So that's Hummingbot. And then the next thing I'll show you is a Hummingbot miner system. So this is our Hummingbot miner system, just miners.hummingbot.io. To get started, you would basically create an account. So here I already have an account set. To configure it, I would go to settings here. And then when you're running this for the first time, this will be disabled because if you haven't connected it yet. To connect it, you'd simply just click on that row and then enter in the read-only API keys. So these are the read-only API keys that we created earlier. You'd put them here. And once you've submitted that, then it will start to be, the system will be able to start retrieving your data and determining whether or not you're eligible or you're creating orders that are eligible for rewards. And the other thing to configure here is you can connect your wallets. So here you can see we have 4 wallets right now. So this is where the rewards earned would be paid out to. And shortly in the next day or two, there will be an algo wallet input that will be deploying in the next day or two. So that will allow you to enter your address where you want to receive your algo rewards. And then if you hit click on one, you just simply input that. And then once you do that, then we'll register that, and that's where it will pay rewards to. And so here on this app, if we go to markets, I'll just kind of walk through what this kind of table means and how it works. So if you've seen the screen yield farming on CoinMarketCap, so that tab, you'll probably be familiar with a lot of how this table works, and they're pretty similar. So you can see here right now we have 3 campaigns running for COTI, Mainframe, and for iExec. And we're also running campaigns for three trading pairs for each of them. So these are all the pairs that you can participate in now. So once the algo campaign is live, you will see those come up here as well. So here it shows that these campaigns are in Binance, and the reward it's paying is in this case for COTI Tether. You see for iExec, it's paying its own native tokens. And you can see the current number of active bots. And then the next column is liquidity. So what liquidity is the aggregate amount of orders that are being created right now by the miners, by participants. And then lastly, you see yield. So what yield is here, that's like a measure of comparing the reward pool versus the amount of liquidity in that token. So the lower the yield, it means that more miners are participating in larger amounts of assets they're using. The higher the yield, then it means like relative to the reward pool, the liquidity is relatively small. So you can see here between these 2 pairs, one is roughly half the other one. And that's because you can see the amount of liquidity is roughly double for that one, because there's more participants participating in that pair. So that's why that yield figure is lower. And then to break it down into a bit more detail, if I click on one of these, let's say this one. So on the COTI USDT pair, you can see the rewards available, weekly rewards to 250 USDT, the max spread of 2%. So I mentioned this earlier when we first got started. So what this means is if you place orders with spreads wider than 2%, they would not be eligible for rewards. But if you place them within that, then they would be eligible. One thing to note as well here, and we can also discuss when I click on some of the snapshots, the tighter your spread is, the more rewards you'll earn. So that's kind of another thing we factor into how rewards are distributed. So if you use tighter spreads, it is riskier because you are using tighter pricing. So in order to compensate for that, the Hummingbot miner rewards you would be earning would be higher for tighter spreads. And then moving on to this table, so this snapshots table, you can see here, also what I mentioned earlier is how we basically pay out or calculate rewards for each snapshot, each minute. So these are kind of our equivalents of Ethereum blocks, but you can see here, these are the detail per each block. So for this one, there's currently 21 bots. There's a 0.7%. This is the weighted average spread. So this is just helpful because you can kind of see where all the traders are on average, how they're kind of trading this market. This is the rewards per day, and then this is the liquidity per day, or the current liquidity, so the current amount of orders. Also, if you're familiar with DeFi, the concept of total value locked, our metric liquidity is kind of very similar to that, because basically, in order to create orders, you need to have assets on the exchange that you're using to create those orders. So in a way, it's very similar to total value locked as you would think of it in the DeFi context. And then lastly here, yield per day. So you can see rewards, actually the numbers work out pretty evenly. So the rewards $35 roughly, and the rough amount of liquidity orders as of this snapshot was 7,000. So that's why you get to 0.5%. So this 35 divided by 7,000. So that's per day. That's why you can see how this number could get high pretty quickly. So that's why this one, I think, was showing something like 200%. So 50.5 roughly times 365. That's why the annual yield we're showing on the homepage is something like 200%. And then one other thing to show here, just to demonstrate the other parts of the Hummingbot Miner app. If we click on dashboard, this shows like the current rewards summary. So this bot that's set up for testing, you can see here the time history of the rewards it's earning. You can also see the payout history here. So each week it's participated in the amount that it's been earning. There's also a performance kind of tab. So this shows you your profit and loss. So here, this bot, what it's done is it actually hasn't traded in the past hour. So it's been creating orders. So it's been earning rewards. So it's in the past hour, this bot has traded. So in the past hour, this bot has been creating orders. It's earned 2 cents. It hasn't traded. So the profit is 2 cents. And then if I go back to the rewards tab, just one other thing to show here. You can see this will show the breakdown of each minute. So like where I'm earning the rewards, or which campaigns this bot's earning rewards from. And actually, if I go back to the snapshots, I would show one other thing here. So if I click on one of the snapshots, so here it shows even more detail. So it shows in this snapshot, there's 7,200 worth of orders. It shows how it kind of breaks down between bid and ask, but it also shows my orders that I've created in this snapshot. So this is kind of how you can also compare, basically, and kind of see how my rewards that I received for this snapshot, how it compares to the overall pool. So you can see here, this is kind of like the proportion of the total liquidity that I've provided. You can also see that here, this bot has a slightly wider spread on the ask side, well, on the ask side, slightly tighter spread on the bid side. And those factor into kind of what ultimately is down here. So the rewards I earned as compared to the overall miner pool. And the last function we have here, so we do have a leaderboard, so you can see kind of each week just the different folks who are participating, how much they've earned in that week, and you can also see the breakdowns per pair. So you can kind of see compare maybe how your bot's doing versus others, and see the folks that are participating. So that's pretty much it for the demo. So I will just post here as well, just maybe some more useful links. And then so now let's go to Q&A. So feel free on chat to ask any questions you may have, and then we can go through those now. So I do see there is one question. So if algo doesn't change in price, if you supply algo USDT, Yeah. So if algo doesn't change in price, yeah, then you shouldn't be losing money because it hasn't really moved. I think like and also if it hasn't changed the price, if there hasn't been any trading. So basically, if you have orders in the book and they haven't traded, then you haven't done anything. Obviously, then you wouldn't lose any money. But if there were valid orders, then you would still receive rewards. So as I showed you on kind of my rewards dashboard in that example of RLC ETH, that's a case where the bot didn't trade and it earned rewards. So it did earn some income even though it actually didn't trade. So that's actually a good question. So we do get asked that a lot. So, and I'll just explain that in more detail. So for our system, we're kind of encouraging folks to provide liquidity, and how we define liquidity is how easily tradable an asset is. So you can also look on CoinMarketCap. They have they've been ranking exchanges by a metric called liquidity. And what that is it's a measure of how good pricing is, as well as how deep and consistent the order books are. So that's kind of why we designed Hummingbot miners to focus on, or what we decided to focus the metrics on. Basically creating orders on order book, as opposed to say like filled order volume. So even if you don't trade, if you're in Hummingbot miners, but you've added orders to order book, you will earn rewards. We purposely not incentivized things like filled order volume or filled trades, just because as you guys may know, so wash trading is a common thing in the crypto space, and we didn't want to encourage behaviors like that. What we wanted to encourage is helping tradability, helping populate and create order book depth. And that's kind of why our system is set up that way. So Kevin has a question. How does one customize and implement their own trading strategy? So there's actually a few ways. So I'll just go a reference here on the site. If you go to our docs, first of all, in the market making strategy itself, we have a section called advanced market making. And maybe I'll just go through a few of these right now. So some of the features like order levels, for example, what that is as you saw in the bot that we configured, it was placing one order on each side. What order levels allows you to do is it allows you to create multiple orders on each side. So for example, we can have like different tiers. So like, let's say like the one we programmed was 0.5% spread. So we can have, say, a number, let's say 3. So we can have an order at 0.5%, an order at 1%, an order at 1.5%. And then we can also increase the sizes. So what you have is this like, it looks like like upside down, like wedding cake kind of structure, where you can have different amounts at different price levels that you're comfortable with. So that's typically what a lot of market makers do. So I'm just going to see if we have a graphic. Oh, we don't have a graphic, but here you can see it's created 3 orders. You can see here the spreads at different spread levels. It also has an increasing size. So what this does is the bot is more comfortable, or whoever configured it is more comfortable to trade more at wider spreads, because it's a less risky, or that are at levels that someone's comfortable with. And but at tighter spreads, you'd use a smaller size. So there's a number of things you can do here to customize it, and you could read up here. And one other thing is we've made it very developer friendly. So we have a scripts feature. So for example, we have scripts, and we actually have some template scripts available on our site or on our GitHub. So you can actually program. So the code base for this part is written in Python. So if you have some Python experience, you can configure a script. So this allows you to give more control. We also have a developer manual here. So, and we are launching a new doc site shortly in the next few days. So what we really tried to do is make Hummingbot as customizable as possible. So we've tried to create and spend a lot of time creating developer manuals so that anyone can hack on the code. But the easiest way to get started on doing that is on that scripts feature, which are kind of like plugins you can create. And we do have templates that you can work off of to get started on that. So Carlos asks, can the strategy be updated for running bots? Yes. So we have a number of on-the-fly commands. So let me see in our docs. So we have here in this section. So there are some parameters that you can change while the bot's running. So without having to start it or restart it. So things like spreads are actually they're listed here. So these are parameters you can modify while the bot's running, and it will just at the next time it refreshes your orders, it will implement those changes that you've input. So Eric asks a question, how does Hummingbot make money? That's a good question. We get asked that pretty often. So there's actually a number of ways we generate revenue. So for one is we've partnered with a lot of these exchanges. So with Binance, KuCoin, OKX, although those last two exchanges are in the news lately, but crypto.com, Liquid, and so forth. And so how one part of our kind of agreement and partnership with them is any trading revenues that are generated from Hummingbot users, they'll provide us kind of a fee share from that. And also as part of our partnership with crypto.com, there's actually a referral reward as well. So basically, if you use our referral code for crypto.com, you would get sign up rewards from that, but we would also get rewards for that as well. So that's kind of one way. The other way is we are partners with, and we do receive development grants. So if we go to like, for example, our connectors, so the number of exchanges that we've integrated to. So for some of these, for example, with 0x, and for some of these exchanges, we have development grants. So they'll provide us a grant so that we can integrate and support their exchange. We've also done that with a number of protocols. So we have partnerships with Celo, also with Balancer and Terra. So what they're doing is they're giving us development grants so that we can connect Hummingbot to trade on their platforms. And then the third way we generate revenue is for the liquidity mining campaigns. So for example, for the Algo one, Algo is paying us a fee to host their campaign. So so issuers who want us to run campaigns for their tokens will pay us a platform fee that that enables us to host the systems and support our infrastructure and support to manage those campaigns. So Jeff asks, are there any issues around loss? So vectors for impermanent loss, or is it up to you? Yeah. So so market making is the biggest risk of market making is inventory risk, because if you get swung around, so what inventory risk is because you have assets. If you get swung around, so what I mean by that, like if you're buying, let's say Algo when prices are falling, or if you're selling it too soon when prices are increasing. So timing is kind of, that is the main risk of market making. So actually, if you go to our blog, we just put out an article about this just the other day, actually. So there is risk of market making. And so risk management is really important to consider. So what in this blog, and I could post it on the chat here for reference. What this does is, so in this blog, we kind of discuss what those risks are, but we've also discussed some of the features that we have in Hummingbot. So this one is kind of a diagram of inventory skew, which I went through earlier. It tries to keep the mix, but there are other things like field order delay, and then hanging orders. And when we configured Hummingbot, you probably saw it asked me about ping pong. This actually shows you what that means. So I encourage you to look at this. So this helps you kind of manage the risk. And if you want it, because you also mentioned impermanent loss, I actually wrote a blog as well the other day about that. So comparing AMM's concept of impermanent loss versus Hummingbot miners. So you can post that link as well. So there is risk. What I would say is the one thing that Hummingbot has a leg up on as compared to say participating in a liquidity pool is because it's customizable. So so obviously when you participate in a liquidity pool, you have no control. Basically the contract will trade on its own. If prices are going down, it will continue to sell, but it will just continue to do as this program to do. Whereas the big advantage of running Hummingbot, a trading bot, is you can customize it. So you can add risk management features. You can also, if you have certain biases, let's say if you want to, if you have a view, you can overlay like your trading views on top of it. So you can do things like if you think, if you're bullish on the market, well, then you can adjust your bot so that it will tend to buy more than sell. So there's other things you can do. Obviously, it does take a bit more kind of tinkering and working with the bots to do so. But what you get for that is you do get a lot more control, and you're able to customize your bots a bit more. And then Carlos has a question. Yeah, there's a C runtime optimization. So let me read this question. So I understand there is a C runtime optimization. So could there also be a possibility for another language to be used in the future, such as Rust, Golang, etc.? Yeah, so basically, a lot of the code is in Python. So what Python is, it's basically Python that compiles to C for better runtimes. So this actually helps as well for, we have a lot of back testing engines around that. So it's really helpful to do a lot of, it's basically a data scientist, data engineering stack. So we have other tools that we have developed internally that we might be rolling out as well publicly, but that helps us with that. In terms of if we are going to transition to other languages, it's probably would be a pretty big effort to do so. So the optimization we have to see is, it's just because there's already a built-in Python, which is already optimized to do that. And that's what we kind of built around. I think at this point in time, like transitioning to something completely different, like Rust or Golang, would be pretty challenging. It would be basically rebuilding the bot from scratch. So for right now, we don't have the plans to do that. Yeah. Okay, well, I guess we're getting close to the hour. I would say thanks everyone for joining. Hope you found that helpful. I think if you do have any further questions, definitely you're welcome to join our Discord community. So we have 24/7 support. So a lot of this going through the bot. If you do try it out, and if you have any roadblocks, we do have a support team, which is really helpful. Happy to walk you through kind of that. So Eric asked, is there any more measures other than the magic link? Right now, that's kind of what we have so far. I think the good thing is that obviously, as far as the miners app goes, the only thing you're inputting is your read-only API key. So and so that's the main thing. There's the information on there isn't too sensitive. What is sensitive, more sensitive, is the trade-enabled API key. So that one, obviously, you want to just make sure that key is more controlled. And one other thing, I'll just flip back to this this page. So one thing you can see here on the API keys, by default, withdrawals are not enabled. So that's another level of protection. So at the worst case, if your trading API key gets leaked for whatever or hacked, then a hacker could trade on your account. Which is at least not as bad as someone being able to withdraw, obviously. So those are things that you check for. And because you're running Hummingbot on your own computer or your own cloud server, then you're really in control of your security. So that's why we kind of made it that way. We've tried to minimize the risk as much as we can, basically. Great. Thanks everyone for joining. We'll end the call webinar there, and I appreciate you joining. Again, definitely welcome to join our Discord and chat more if you do have any questions. Thanks.